Hello everyone and welcome back to another YouTube video. Today we're going to be talking about flipping nature and the importance it plays within the markets itself. Over the next few weeks we're going to be breaking down a lot more chart work. We're going to be discussing different trades, basically that I've taken myself. We're going to be discussing trades that I've shared with the members, and we're also going to be giving different outlooks on the market as well, dropping some tips and tricks as well to help you navigate your way through the markets a lot easier. The content that's going to be shared is going to be for the broader audience, so it doesn't matter what style of trader you are. It doesn't matter if you're a swing trader, day trader, or whatever it is. It doesn't matter if you trade SMC, support and resistance, or if you trade from moving averages. These rules and these tips and tricks that we'll be sharing with you will basically help the broader audience itself. Everybody will be able to gain something from it, and that's the point of the content itself. So what is flipping nature? Well, to understand what flipping nature is, we must first of all understand the three main points that I think make up a high probability setup outside of following the trend, and also outside of the fundamental bias itself, which are obviously all very important. But just these three core factors alone play a massive role in finding high probability setups, and they are price, time, and price positioning. Okay, these three core factors here, or characteristics, will make up your high probability setups. But today we just want to focus on time. Another day we're going to be talking about, price in itself, and then we're also going to be talking about price positioning. And then eventually, when we talk about all three, we're going to be breaking all of these three down, bringing them together to just form one single trade opportunity. We're going to show you how to piece all of those different things together. Now, a lot of people will just take time for what it is as just face value, but unfortunately time is one of the most important probably parts about finding high probability setups. It doesn't matter if you're a day trader, swing trader, whatever it is. Timing is crucial. But what we can do is we can actually break time down into multiple different categories. But all of these categories are crucial in order to truly understand why we're having certain movements at different times. And throughout this video as well, or throughout the next few videos, I will be dropping certain little hints just to spark an idea that might help you with your own trading. So make sure to listen out for them as well. A simple one of these would be start looking at how time and price positioning play together. What happens at New York Open if it's at the higher low of the day? What's the probability of getting a reversal there? Different things like this can have a massive impact on your trading. It's got to do with time, the placement of where the market is at a certain time. It doesn't matter if it's at this low. Well, what happens if we're at this low and volume starts coming in? What's the probability of it continuing lower if we're at the daily higher low? Or is there a higher probability of it reversing here? Different things like this you should be looking at. But today we're going to be talking about one category of time, and that is flipping nature. Flipping nature is basically helping us time our overall entries a lot better, and that's exactly what I want to talk about today. The only way to explain this is to actually just show you kind of a drawn out version of this. Okay, so let me just show you a whiteboard here, and let's just get straight into it. Okay, so we're going to just we're just going to split the screen up here, okay? And I want you to imagine that this here is just a split, okay? And then we're going to draw an area of support here, okay? And an area of support here. Okay, now up here is going to be your 1 hour, and down here is going to be your 15 minutes. And I want you to imagine that the market has come up to this area here, dropped down, so it's created resistance, came back up, and now the market is coming back down again. So what has happened here? All right, now before I lose any of you, we're not talking about support and resistance, supply and demand. If you want to say that this is a supply and demand zone, if you want to say this is your breaker, I've heard people call it doesn't matter. Okay, just this will be for the broader audience. I'm using simple support and resistance here to explain an example. So as we can see, the market comes down. So I want you to imagine that this here is your bearish candle. Okay, this here, and this is the only one I want you to focus on. This is your bearish candle, and we're going to be buying off this area of support. So what would this bearish candle look like? Okay, and I'm actually going to just bring this bearish candle, for the point of this exercise, I want to bring this bearish candle a little bit lower. Okay, and you'll see why in 2 seconds, just for the sake of this example. So I want you to focus on this bearish candle that we're retesting this area. I'm only on the 15-minute chart. I'm just going to draw the candles within this 15-minute bar. So it might look something like this. Okay, imagine that as a little pin bar, and then finally coming through. Okay, the drawings are not going to be perfect, of course, but I just want you to understand for the sake of this example. So let's just kind of map this out. Let's say that this is your point of interest. It's your supply and demand zone where you're going to enter, and you have your limit order. It's your support area. It's your buy stop, whatever it is. Okay, I want you to imagine here that the market has come down, 2 bearish candles, and now finally you have what? A bullish pin bar. For the majority, a bullish pin bar is going to be a clear signal to get into the market long. You're going to buy this market right here, which is stop right below this low just there, before the next 15-minute candle comes down. Now I want you to play this out. First 2 15-minute candles come down. The last, or then the third 15-minute candle giving you an entry signal before the fourth and the last 15-minute candle of this hour comes down and takes this low out. Okay, stopping you out before seeing the next 15-minute candle engulfing this area, and then seeing the market take off. So the next hourly candle may open up like this then. So open up, and we have, what do we have? Flipping nature. So we've gone from bearish to bullish. Okay, so if you can understand that, we can have a little look at real life examples. Now before you know that, I need you to know a quick timing rule. When we look from a probability point of view, when we look at moves that actually move quickly and fast with momentum, I want you to take the first hour candle as an example. Let's say the market has come up. Okay, we'll use this blue line that's on the chart already. I want you to imagine that the hourly candle has come up to this blue line, bullish candle, and you're looking to catch the flip on up here. Okay, so we're looking for the point of entry to be up here. If your point of interest is correct, if we're actually going to get the sell, if we zoom into this 1 minute candle, what would that look like? Well, we have the last 15-minute candle here, let's say of that hourly candle here, and then we have the bearish candle. Okay, let's see. It's going to look something like this. Okay, so to understand this here is your last 15-minute candle of this bullish candle here, and this candle here is your first, okay, so understand, your first 15-minute candle of the new hour. Your best and biggest moves are going to come from the first of everything. It's like marketing. If you're the first to do it, the first hour of the 4-hour candle is going to provide the best moves. The first 4-hour candle from a new daily candle is going to provide the best moves. It's the same way, just like the new weekly or the first weekly candle of the month is going to provide the best moves. First 5-minute candle just after a 15-minute candle closure. First 1-minute candle after a 5-minute, 15-minute candle closure. The timing is very, very important. I'm going to show you a real life example. Now, another thing for you to understand is that your best moves are realistically not just going to come from the first candle, but within the first 2. Okay, your first 2. And rarely are you ever going to see a market or a move. You're going to see them from, I want to be careful how I say this because I know people will be listening. I want it's not that you won't get an entry signal on your third candle, but what happens is if you're entering on the third candle, so let's just say the market, your 15-minute candle comes up, that's the first 15-minute bar, second 15-minute bar, third 15-minute bar, and that's your entry. Okay, I'm not saying don't enter on that, but be prepared for your fourth 15-minute candle, so the last 15-minute candle of that hour, to come back against you before maybe moving down. Okay, or expect that when the new 15-minute candle opens, it'll be putting the top wick in place for the next hourly candle. So do you understand? I hope you understand what I'm saying there, but we'll show some real life examples here now. Okay, so let's just have a quick look at a real life example here. As we can see here, if we just jump to the 4-hour chart, I want you to look at this example here. So I want you to imagine that you're looking at this area of resistance here. You're seeing this area of resistance here, and now you're seeing it come up for a third time. We see this large bullish candle coming up into this area of resistance, and what you're looking for here is your entry candle on the 1-hour chart. So if we jump to the 1-hour chart, we can see what's happening here. Now, this is exactly what I'm talking about. Here we can see we come up to this area of resistance, and what's happening. Okay, let's just understand what's happening here, right? So this candle here, this exact candle here, that bullish candle, that's the last hour candle of the 4-hour bar. This bearish candle was the third hour of that 4-hour bar. And look what happens. It gives you a clear 3-bar pattern engulfing this doji, you know, a clear rejection of this area. You think you're safe. But in reality, if you waited for the 4-hour candle to close and then wait for this first to second hourly candle for your entry, look at this, first candle, second candle, bearish engulfing the entire area here, you now have a clear entry, full of momentum, literally no drawdown if you look to the right hand side, with a clear target targeting these lows. It's all about timing and flipping nature. So if we just go to the 4-hour chart again, let's just have a quick look here. We can see here, if you wait for the 4-hour candle to close at your point of interest, so that's the exact same. If you're trading a 15-minute chart, that's where your entries are. If you wait for an hourly candle to close at your point of interest and then look for flipping nature within the first 15 minutes or second 15-minute candle, you're going to find your highest probability trades from these setups. So, you know, you can find this anywhere on the chart as well. Okay, you know, here, let's just, if we just scroll, I'm just going to randomly scroll and just look for areas of support or areas of resistance. Okay, look here, we'll just mark these out. I have this highlighted here. I suppose we can talk about this as well in 2 seconds, but just here to get some examples. All right, let's have a look here. Okay, we can see here resistance, now support, we can see support over here. So let's highlight this area. We're on the 4-hour chart currently on pound dollar. If we highlight this area just to get a better understanding of what's going on. Okay, let's have a look. Drop down to the hourly chart. Okay, so here is the last 15, this is the last hourly candle. That was the third hourly candle from the 4-hour. That was the first. Okay, so we can see here, that was the first of the 4-hour candle, second, third, fourth. The first candle came down, provided us a clear, you know, bullish candle before then moving down lower. Okay, now if you just waited for the 4-hour candle to close at your entry, you would see that the first hourly candle of the new 4-hour candle provided you a clear signal. It did it again here, and then we saw that market push off. All around flipping nature, working with the flipping nature of the market, focusing on timing. Let's just go onto a daily chart to show more of a swing style example. Maybe even we can show, you know, supply and demand, trading, you know, whatever, you know, trading SMC. You know, here we can see, let's just say that this area here is an area of demand within here. So what I want you to focus on is this area in here, this level, okay? It's in the demand zone, supply or demand zone, it's in an order block, whatever you want to call it. You know, like I said again, we're all trading the same stuff. But if we look within this area here, we're on the daily chart. So if we're on the daily chart, what are we looking for? We're looking for 4-hour candle closures, okay? So the daily, what we're waiting for is the market comes down, it closes at the line itself. So on the 4-hour chart, we're looking for our entry on the, we're looking for our entry on the 4-hour candle from either the first, second, or the last candle in reality. Okay, and as we can see here, we close down. So let's just get a better understanding of where we are. Okay, so this candle here. Yes, okay, there we go. So this candle closes down at price, and then see what we have? Our next entry candle. There's our entry candle. And you're basically getting out of all this chop by just simply waiting for the flip, by waiting for the candle to close at your point of interest. You're out of this chop, and then we see the market taking off, okay? And this is on any time frame. If we can jump down to the 15 minutes, for example, okay, let's just look at a 15-minute time frame. Let's look up here, or where, you know, let's look at a decent enough move here. Down here, actually, look at this. You see here, bearish candle. Let's highlight this area. Down here, I'm going to mark this area of support. And we're going to jump down to either the 5 minute, or we can jump down to the 1 minute. For the sake of this exercise, we'll jump down to the 1 minute just to prove a point here. Using the higher time frame flipping nature for the lower time frame entries. So we can see, let's just have a look. Okay, so 15-minute candle closed here. And then we can see here, as we push down, by waiting for the 15-minute candle to close, we're now looking for our next entry signal. There's our entry signal right there, that strong bullish candle hugging the inside of this bearish candle here into that low. And as you can see, we do not break that low again, and that's where you're going to time your entry the best, okay? You can even, if you look at major reversals even as well, they're going to take place after the new 15-minute candle opens. So if you're trading a 1 minute chart, watch the 15-minute and the 5-minute candles for their closing and opening prices. Okay, so if we look here, let's just have a look. Look here on the 5-minute chart. If we look here on the 5-minute chart, let's get a kind of understanding of where we are. Okay, so this candle here was the last 15-minute candle. Okay, now if you, or sorry, the last 5-minute candle of that 15-minute bar. So here is the 15-minute bar. If you look, okay, if you look here at this kind of pin bar, doji-ish candle, if you entered here, you're in the middle of that 15-minute candle being open. So what happens? The next two candles come down and take your stop out. But if you waited for the 15-minute candle to close and then look for, or open the new 15-minute candle to open then, and then look for your entry within the first 1 to 2 candles, or even the last candle, you'll see that we have a clear entry signal then. There's your pin bar, and now look, you're straight in behind that momentum. So it's simple things like this that can have a massive, massive impact on our trading. This way of looking at timing the market to the point of even looking at price action and how the market closes can have a really big impact on the amount of drawdown that you have to sit through on a day-to-day basis when it comes to your entries overall. So if you like this video, please hit the subscribe button. Please like this video overall, and just leave a comment down below if you have any questions about, you know, charting or fundamentals or anything like that. that, I would be delighted to make some videos about it and help the overall trading community. Until next time, we'll see you then.